Hi, friends. Welcome back to another episode of Multifamily Deal Talk. I'm your host, Kevin Parrish, and today we have a very special guest. All of our guests are special, but this one's special to me. I would consider him to be a friend, a mentor, colleague, faithful brother, and I will read his bio and then I'll introduce him. So, he is an executive managing director of multifamily capital markets with Newmark. During his 30-year career, he's been involved in over 1 billion of acquisitions and development. Additionally, currently, he's been involved in over 10 billion of brokerage transactions. Previously, before Newmark, he was at the Milestone Group and at JPI, and he's an active leader in the NMHC Multifamily Housing Council, and he's on the Regional Advisory Committee of Apartment Life, which is awesome. And he graduated from Texas Tech, and he received his master's degree in real estate from Texas A&M University. I'd like to welcome Mr. Richard Furr to the show. Richard, good to have you.
Thank you, Kevin. Thanks for having
Absolutely,
me.
man.
Appreciate it.
Thanks for coming.
You bet.
So you and I go back a little bit, don't we?
We do. Old friend.
Old friends. It's
Yes.
probably been, is it 10 years?
Yeah, probably 10 years. Yeah. Great to see how you've grown. Very
Well,
proud
I
of you.
appreciate it. I
Yeah.
would say I wouldn't be here without you. So
Well,
piece of the
that's,
success here. Hopefully, same for you.
that's
So
flattering. Yeah, I wouldn't be here without you because you
Yeah, man.
invited me. So
yeah.
there you go.
Well, we're glad you're here. So
Thank you.
let's jump in. First question, and then we'll talk about a deal again. It's multifamily deal talk. We definitely want to hear. I'm sure, as we've said, you've got a ton of experience, so we want to hear about the deal you brought for us. So, first question, just a general question for you: why multifamily?
Yeah, great question. I've worked on national platforms. I was with accounting firms when I first got out of graduate school and traveled coast to coast, looking and analyzing real estate, all facets, all food groups of real estate. And then, as I ran a national platform for JPI and Milestone of acquisitions, it's just so readily abundant that multifamily, uh, is kind of from top to bottom, is such a good quality investment class relative to the risk adjusted returns of the competing classes of office and retail. Industrials is more akin to multi, but hospitality, land, multifamily is just have been year over year throughout my career the best risk adjusted returns in real estate investment.
That's great. It's good insight. It's a general question, so enjoy
Yeah.
hearing why
Sure.
people like multifamily. So, uh, with that, let's talk about a deal. Again,
Sure.
multifamily deal talk. So, as discussed, I've created a framework called the SAFE method on how to source, analyze, finance, and exit apartment community investments safely and profitably. So, let's just talk about your deal and let's just run it through that, right? So, is this like a favorite deal? Is this a
Sure.
memorable deal? Tell us about it.
Yeah,
Backstory.
no, and thanks for asking. That's I've never heard the safe. That's a really good way to break down the components. Get in, look at it, capitalize it, get out.
Yep. And I think
Um,
it's, thankfully, like, obviously having worked with you and during the last cycle, watched some of the largest owners buy and sell real estate and
yeah,
just how they treat it like a business. I'm like, okay, well, they're having success. How are they doing so? And
yeah,
so it's through that framework. It's like, okay, this is really the safe way to do it. Of course, no investment is safe,
sure.
right? But it's really just creating a system to have a deal filter. And like you said, like each has its own silo. So
Yeah.
fire away.
Yeah, no, great. So the first 15 years of my career was on the investment and development side. So I have a lot of deals that I acquired through the years. A lot student housing, west coast of Florida, and a lot of those bring back a lot of fond memories. As brokerage, the last 13 years, some deals, every deal takes on a life of itself, which is what I really enjoy about
And that's
the
why we're here.
business.
Steel
Yeah, it's
talk,
true.
right? Yeah.
Every,
Every deal.
I mean, I could literally talk 20 minutes about every deal
Yeah.
of just some facet of it.
Sure.
You learn something new on every
Mm-hmm.
transaction, whether it's a relationship, something physical, something negotiating, legal, there's always something. So it just it keeps you fired up and keeps you going every
Sure.
day. You don't need any help in being fired up, but if you did, you just go out, you go to a deal, and
Well,
then
I'd say maybe not in this market, but I'm trying. I'm trying to stay
we're
fired
all
up.
trying.
Yeah,
Yeah, yeah. Like that. If you want to go longer than 20 minutes, I have some time on my hands
sure.
right now. It's not nearly as active as we were, but a deal that I go back to and think about a lot is I worked at JPI for 10 years. Met my wife there. Great organization, great team, great company that builds wonderful product. And when they were ramping back up, um, oh, 2013, 14, 15, from a rough time in the market, uh, we took on a listing assignment. It was ARA then before we sold to Newmark. Uh,
So
we
ARA was Apartment Realty Advisors, and then they were
correct,
purchased by Newmark, right?
correct. Yep,
So as far as the source goes, so sourcing it, it's a previous relationship. Given
yep,
that you had worked at this company, just
yep,
had deep ties there, and
right,
then when you transition to the brokerage side, that's an easy. I'd say easy. It's there's a relationship there, so they
right,
trust you. Say, hey, let me, Richard, look at our deal for us, and then ultimately you guys were
right.
awarded the assignment. So
Right.
got it.
That was great back then because I worked with all my
Sure.
clients.
Yeah.
They were my friends
Yeah.
and still are to this day.
And I mean, that's isn't that how the business is? Like,
Yeah,
it's just so
correct.
relational and yeah,
Yeah,
it's great.
that's right. And it should be. If
Yeah,
it's not, then you're missing the point of
yeah.
the
And that's
business.
like how multifamily is, right? Maybe not
Uh,
necessarily
100%.
retail or these other businesses that are, um, it's a little more kind of one-off, like single tenant,
Yeah,
but these are businesses that are being bought and sold, and so you've got to have the relationship to be able
right.
to advise and that kind of thing, right? So,
And as you mature in the business, that's a nice way of saying getting old. It never ceases to amaze me when I'm on a call and I'm talking with now the child of someone else I used to work with, who's coming up in the business. And my son, his
mhm.
first job out of college this year, and he's in the multifamily business.
It's awesome.
It's just
Yeah,
fantastic.
it's great.
It's just great relationship building foundation in multifamily, and especially in Dallas Fort Worth
Hmm.
area. It's just the mecca of multifamily.
Hmm.
So back to the deal. So source the deal from. It was a competitive situation, though. I mean, we had to make a presentation and analyze, what the property we thought the property would be worth in the open market, uh, why we thought that, how we would sell the property, who would we sell the property to, and just go through, the marketing steps. Awarded the assignment and took it out to the market. Um, and it was at a period of time where there was solid interest, but it wasn't just gangbusters. I
Hmm.
mean, you had to make a lot of calls, a lot of emails, stay after groups to
Okay.
get tours.
So talk to us about the analysis of it. What kind of was y'all's internal analysis? Okay, here's how we think this would be um, able to be sold in the open market. What made it a good deal for
Yeah,
the investor community to come in and acquire? Kind of walk us through that.
yeah. And new development is primarily for institutional or quasi institutional
Sure.
like assets. It's not a value add. It's not a get in and do a lot of work kind of
Sure.
deal. This and new.
So core, would you go
It was a
core?
core,
Got it.
class A core development, and it was just finishing its lease up. So in fact, we took it out. It was probably 80% leased
Okay.
and leasing every month, throughout the process. And the goal is you hit 95% stabilized occupancy, right before you close. So it did. So we went through that analysis, and the market cap rate at the day of the day was, I don't know, 5.5 ish.
Okay.
Back then.
For a core, that
Um,
sounds amazing.
yeah, yeah, really.
Compared to
And it's new, I mean,
today.
it's new development. It
Yeah.
was 170 unit, maybe,
Mhm.
if that. Um, it's
So
just
you mentioned something about it was maybe as the market was starting to pick up traction and velocity was picking up, and you had to make a lot of calls, et cetera. Just out of curiosity for the listeners, how many kind of institutions are in the market for core deals like this? Is there a lot of demand? Is it,
Yeah.
there's a small bucket and we're just going to go to those guys? How does that look?
It's changed a little bit today because there's so much wealth been created over the last 10 years of private groups,
Hmm.
and they are looking to upgrade their portfolio. Starting out, so many companies, self included,
Hmm.
you're buying value add deals, and sometimes you're buying tough value add deals, and it's hard
Yes,
work.
you are.
Yes, you are, and you know the hard work,
Hmm.
and it's high risk, high return. Things go well, you do well, and then you begin to have a track record and create wealth for you and your investors.
Hmm.
And as you move up, at some point you move to B assets, and now these groups are moving to A assets. So today we can sell. It's crazy. We sell $100 million deals to private groups that are able to attract equity and capital and
So,
can
but 10
easily
years ago when
capitalize
this
it.
deal was on the market, it wasn't
Yeah,
quite like that.
it was just a handful of private
Okay.
individuals, but then institutional
Okay.
guys, and the institutional guys have their own box, just like everyone else. So
Sure.
this was a suburban asset, and that in and of itself often cuts out a lot of institutional groups
Hmm.
or some institutional groups because they just want infill, they want core, and they have a criteria
Just low
that's a
risk.
little different.
Yeah.
Yeah, less barriers. There's less barriers to entry in the suburban market, so
Sure.
that cuts them out a little bit. Yeah,
Okay. So that's the analysis, kind of mortgage core investment for the buying community. Run us through the kind of marketing process. What you thought, and now we went to the S, the A, now the F, and now the financing for this potentially looks
yeah.
since it's coming out of lease up as a development, and then ultimately, how you guys award the deal.
So you probably have 200 to 250 CAs signed that people actually download the operating
Okay.
offering
And
memorandum, and the
so
operating statements.
excuse me, a CA for the listeners, a confidentiality
Yeah,
agreement, right? These are not necessarily widely marketed. Um, they're widely marketed, but it's to a select group of people,
right.
and you want to make sure that that you as a broker are keeping certain things confidential. So
Yeah,
you want other companies to sign a CA,
right.
correct?
Right, and we
Okay,
wanna know who it is, so
correct.
we can stay in contact with whoever
Got it.
that group is.
Got it.
So you widely email, call thousands of people
Hmm.
throughout the country and throughout the world, and that narrows down quickly to a couple hundred groups
Got it.
that are gonna at
Okay.
least kick the tires on it
Sure.
and run a quick analysis, if not in depth. And from there, we toured probably back then, um, you know, 20, 25 different groups
Okay.
through the property. They go through units, they look at the common
So would you
areas,
say
the
20 to
amenities.
25 tours is a good number?
Back then
Healthy.
on this
Okay.
specific asset, today would be more.
Got it.
In large part, when markets matured, partially, but today there's just less product on the market.
Got it.
So when you bring product out, it seems to get a little
Sure.
more
Supply and
interest.
demand, of course. Got it.
Exactly.
Okay.
So after you have the tours, you call for offers. You get the offers in. We had 3 to 4 groups that kind of separated from the rest. We're at right at our strike price where we thought it would be. So then we have a best and final round,
Okay.
and awarded. Then they all sharpen their pencils, so to speak, fill out a questionnaire, pretty detailed questionnaire of how they're sourcing their equity,
Okay.
what are they underwriting for debt, what are they underwriting for all their
So the financing, got it.
operations. Um,
And so you guys do all that because really what you're trying to ensure is you're picking a qualified group um, that can close the deal,
yeah,
right?
you're mitigating risk.
There we go.
So if somebody, you look at someone's underwriting, and in today's world, let's say, if you look at if they provide all the information you request and they show their underwrite where let's say their insurance is only $200 a unit,
Hmm.
then look, that's not market.
Yeah.
It's you're way off
Yeah.
here. So
I wish it was 200.
yeah, don't we all? It was for 20 years.
Yeah.
And it's quadrupled here overnight.
Okay. So
but,
through that, you've whittled your buyers. How are they looking at it from a financing perspective? This
uh,
specific deal.
for the most part, because it had reached stabilization, everyone was looking at permanent debt.
Okay.
So they were just going to Fannie, Freddie, maybe Life Company, but for the most part, the agencies are more competitive. And then they were either sourcing capital from a fund that they had,
Okay.
the capacity to raise money, or they actually had private individual had cash on hand, which is a group that we went to. He actually didn't have cash on hand, but he was about to have cash on hand through a 1031
Got it.
exchange.
So the agencies being government entities, right? They want a loan on housing, and then life insurance companies, they have obviously so much money,
Yes.
and they're very low risk. They want to be able to place it on a debt
Yeah,
instrument. They just want to know in a few years that money's still going to be there,
that's
right? So
right.
okay,
They're low leverage, low risk. They're
yeah,
only, not only, but primarily investing in high quality Class A, well located
sure,
deals. Again, low leverage. So, they're just looking for a coupon
yep,
to diversify from their other,
got it.
numerous
Okay,
investment
okay. So
opportunities.
yeah, tell us how it got awarded.
So,
Ultimately,
so the group
buyer.
that we awarded it to was a private individual who was rolling out of some other investments.
Okay, so you were saying traditionally it's been more institutional groups, small amount of private guys, but this one you
Yeah,
back then ended up picking a private guy.
yeah,
Got it.
yeah, and
And
it
did
was
we
kind
say
of
how many
interesting.
units this property was? Sorry, just for
That's
the
486, I believe. That's
oh,
good size.
larger property.
Yeah,
Okay,
good size.
got it. And I think you said like 175 unit back
Yeah,
then.
roughly.
So
Yeah,
what is that? 60 million somewhere
yeah,
there, close
which
plus minus.
yeah,
Okay,
big number
got it.
back then.
So a private guy,
Yeah,
it like was he? Do you know if he was raising
it was
money, family money?
a private guy who it was his money. He
Got it.
started as a private individual, investing small, and just over the
Over the
years,
years. Got it.
30, 40 years of doing this, have
Got
rolled
it.
into some
And
really
so his
expensive wealth.
motivation probably was, like you said, suburban deal, core, low
Yeah,
risk, doesn't have to do a ton of value add. Was he local to North
yeah. He
Texas? Was
he
he
was it's a California guy
got it.
who invested here. A guy we had sold deals to
Okay.
before, which is very, very helpful. We can then have a track record and
Mhm.
say for sure we know how this guy has operated before anyway. So that mitigates risk as well.
Got it.
But he was definitely into the moved into the wealth preservation mode versus the
Sure.
wealth creation
Okay.
mode. So he was looking to just park some money.
Got it.
So we we awarded to him, and his deal was kind of dragging out a little bit. Um, so he just asked if he could put down a really big number of
So what do
additional
you mean his
equity.
deal was dragged out? Was he
His
trying to sell
exchange
something?
monies,
Oh,
yeah,
okay. So he
his
was trying to
exchange
sell to
deals,
then
right?
1031 exchange,
Yeah,
tax-free exchange into this
yeah,
property.
exactly,
Got it. Okay.
exactly.
So that was you said so that was dragging out. So
Yeah,
was that pushing y'all's kind of the timeline of the deal
yes,
back?
yes. It was
Got it.
pushing the close back. So he
Okay,
came.
so we had said that this was probably 50, $60 million deal. When we open escrow on these deals, we've got to put up earnest money. What was the initial kind of earnest money amount, if you remember?
Yeah, back then is 300 grand probably.
Okay.
You know,
So
half
it
a
can be
mil.
anywhere from 0.5% to 1-2%
Yeah,
just traditionally. Got it.
exactly.
Okay.
Just depends on the market.
Got it. Now,
Um,
was, as the market got stronger in the last 5, 6 years, there was non-refundable earnest money was
yes.
present. Was it on this deal back
It
then? Do you
probably
remember?
wasn't. I don't
Okay.
recall it being.
Okay. Maybe at
Back
some
then
point
wasn't.
after
Yeah,
due diligence or
yeah, because
something.
it's a little more back then. It was a little more risky about whether it was going to stabilize
Got
and
it.
when and how
Okay.
and all that. So it would have had some help anyway.
Got it.
Today's world, yeah, it's still almost automatic.
Yep.
Most every deal has hard money unless there's some kind of hair on it.
Got it.
Um, so so he extended. He offered up I won't say excessive, but a really large amount of earnest money uh,
To extend
to
or to buy
extend.
more time.
Yes, to buy more
Okay.
time.
So
So,
how did the seller initially view that extension? Were they willing to give him time? Did they not
totally,
want
but
to?
it was such an extreme amount of money, and he
Okay.
passed it through to the owner. So
Okay.
it went through the title company to the owner,
So just
which
for
is
out of curiosity, what's an extreme amount of
uh,
money?
it's a good question. I don't know that confidentiality is worn out. I don't know
Couple
what
million
the
bucks, I guess, is
many millions,
really
many
goodness. Okay.
millions. Yeah,
Man. It's just
yeah,
saying, hey, I'm gonna buy this deal. You can count on me.
yeah.
Here's, a
It
large sum
it
of
it
money
was
to ensure that I'm gonna
yeah, it
perform.
was almost equal to the equity amount that the developer had in it.
Really?
Yeah,
Well,
so
that's a lot
they
more
immediately returned
money.
that prior to the closing.
Oh my
Yeah, so
gosh.
that was pretty rare.
So they were
In fact,
happy?
the owner, well, they joked like, and I don't remember the dates here exactly, but he said, we'll give you this amount. We're going to give it to you. We're going to pass it through to you, but we want, through September to close.
Hmm.
And the owners joked, well, he can have through December if he wants. We're
Yeah, of
all,
course. I mean,
we're
that's
all happy.
yeah,
It's all great. So
well, that's a great. Just that
it's
part of the story is a
yeah,
story in of
I know.
itself.
It's
Awesome.
again like every deal
Yeah,
that just popped up from nowhere. And,
yeah.
just it was very fascinating. And he's owned the property ever
And
since.
so then
And
he ultimately closed,
yeah,
and
he
everybody's
closed.
happy,
He
and
closed.
so he
Everything went
still owns it
great.
today. So that's
Still
what
owns
been
the
about
day.
10
And
years, I guess.
yeah,
Is so again, so the E of the safe is exit,
yeah.
but his exit strategy obviously was this is maybe a longer term hold, like you said, wealth preservation, and that's very much an exit strategy,
Yeah,
right? It's like we're
sure,
going to hold it. It could be 10 years, it could be 20 years,
sure.
but hey, he may pass it to his family or
That's it.
something like
And
that.
then,
Yeah,
with private individuals, it becomes family oriented.
sure.
So now you have to start thinking about how you,
The generation and
taxes
mhm.
and so many other moving parts. So
Dude,
fascinating.
that's a cool story.
Yeah, it's
Well,
cool
we
business.
it is a cool business, and that's so what you were saying is like every deal has some new component,
Yeah,
and I'm sure you had not experienced that before. Hey, here's a large sum. I want this deal.
yeah.
Man, that's very cool. Very, very
So
cool. Well, I mean, that's a deal talk right there. Thank you for sharing.
you bet.
Yeah, is that
Thanks
it?
for having me.
Anything else to add on it? Put a
No,
bow on it?
just thank you for having me. This is really cool.
Yeah.
Appreciate
Well,
the forum here.
so I've got 3 questions for you.
All right,
They're quick, and then we'll
let's
do
go.
something. Then we're
Let's
gonna
do
do
it.
something fun. So,
Okay.
okay. So, first question: what is one thing you would change about the multifamily business or industry, if you could?
Oh my goodness. The one thing I would change,
Or
boy,
what is one
I'm
thing?
just
Yeah.
so ground into what we're doing today. Um, uh, Boy, that's a really good question. I don't really think about changing things. Um,
Well,
I,
is there something that bothers you or that you'd like to see more of,
yeah,
or
I wish there was more loyalty, and I mean, like in this is life in general, probably more
Sure.
than anything else. Um, but I mean, it's a business, and when you go back and forth as friends and then
Mhm.
business, and it can get kind of
It can.
convoluted from time to time,
Yep.
and there's some relational strain there. But from my standpoint, it'd be easier for me
Sure.
if there was more loyalty.
As a broker who relies on transactions
Right.
and right, and I mean, even I'd say on our side, principal side too,
Yeah,
same from,
it's everybody.
yeah, it is everybody.
Yeah.
You're right. We could that would be a whole different podcast of
Yeah.
that kind of discussion,
No doubt.
deal discussion.
That's why you
So
took me back there. I was like, "Do I wanna go there?" But
yeah.
yeah, that's probably it though.
Okay. So more loyalty. I would
Yeah,
say I would agree.
yeah,
That's very fair.
yeah.
That's very good insight. Okay. Next question. What advice would you give to anyone currently in the business or wanting to get into the business?
Yeah, I would say, and I tell the young guys this that work with, is that spend as much time as you can getting into different organizations, meeting different people, and that doesn't necessarily mean it has to be through a multifamily organization. It doesn't have to be through a real estate
Hmm.
organization. You never know the relationships that are going to come up down the road.
Sure.
I distinctly remember so many times, working in a room with a big conference room, and there were all these guys on the other side. There was one young guy on the other end of the table,
Hmm.
and I happened to say something nice to him, or we talked, we kind of connected a little bit, and 20 years later he's the head investment officer at so and so whatever,
Sure.
and he remembered a 45-second
Sure.
conversation. um, so just make those tentacles as wide and deep as you
Yeah.
can.
I mean, that's a life lesson though,
Yeah,
right
it
there. I mean,
is.
that's awesome. And that's actually one thing on the intro that I was going to say about you is I'd be hard pressed to find anybody in our business that has a bad thing to say about you, because I think that's your mentality of what you said about this is like you recognize the long game and the relationships, and that you never know who's going to end up where, and it's just a good thing to just treat people the way you want to be treated, right? I
Sure.
mean, that's a life lesson, so
100%.
that's great. Okay, last big question here. Where do you see multifamily headed in the next 5 to 10 years?
Well, that's a great question. It's a pretty block and tackle kind of business
Mhm.
on the one hand, and the other hand, there's so many nuances. And with technology and the way we price rents, the way we analyze the inflow of capital. As we sit today, capital is a little harder. I mean, debt doesn't underwrite great. A lot of money on the sidelines. I think the next year or so going to be a little challenge from just a
Yeah, short term is going to be
short term. Short term is tough, but it's just a numbers game.
hmm
I mean, everything has to have some type of capital event in a
hmm
period of time. So if it's not happening today, I mean, 2 years ago was the greatest transaction year ever. So
Sure. Well,
to,
maybe this guy that bought the deal we talked about has to
at
do
some
something,
point,
but he's had it 10 years, right?
right,
So yeah,
exactly. So
at
he
some
just
point he
wakes
still
up
will
and
have to do
says,
something, right?
"Yeah, I
So
need to do something
mhm.
different." So I think it's going to be a little tight here the short term, but there'll be big transaction volumes, and especially here in DFW. I mean, there's going to continue to be such an influx of people with
Mhm.
just where we are, the airport, the expansion of the
Sure.
airport, the jobs, the Texas story,
Mhm.
and there's just going to be such a need for housing.
Yeah,
It's not going to go anywhere.
got it. So just what you're saying is there's gonna be more deals, just doing deals.
Just going to do more
I
deals.
love that.
Yeah.
That's great. Well, those are great answers to those questions. Let's do something fun.
Okay.
So this is the segment I call buy or sell.
Okay.
Buy as you like it,
Okay.
sell as you don't like it.
Got it.
So just 10 words, 10 scenarios, something. Just tell me if you're buying it or
There you go.
selling it.
Do you do
Okay.
this same thing for everybody? Or
Mhm.
is this, okay.
Buy or
Yeah.
sell. Okay. Just a
Yeah.
little fun, little
Yeah. All right.
personality
Yeah.
here. So
Okay.
liven it
Let's
up.
do it.
A beach vacation.
Buy.
Okay. Hey, some people don't like the beach. You never know. So that's not you.
Okay. I'll buy whoever's selling that
Okay.
one.
Shopping with your wife.
Oh, I love my wife. I'll buy just because she's there, but I don't want to
The initial
shop.
reaction may have
I
been
don't.
so.
I don't want to buy anything. I don't want to buy anything for myself
Got
ever.
it. Just the but this is
But
shopping.
I'll just
The
hang out with her
okay.
because
So you're buying
she's
that.
cool.
Got
I'm
it.
buying.
Okay. Bridge debt.
So
Sell bridge debt.
yeah,
Always.
no, just
Okay.
today.
Just today.
Yeah.
Okay. Five Guys French fries.
Oh, fantastic! Buy.
Buy. Okay.
Oh yeah.
Like you can say, "Oh, Five Guys," and everyone, "Oh, Five Guys are great," but some people may not like fries or
Right.
In and Out or some people, right? So,
Yeah, yeah. No,
but
I would
Five
sell. I
Guys
would
are
sell In and Out.
okay.
In and Out is bad fries.
Got it.
Whataburger is the best.
Got it.
Big family discussion on that.
Okay. Work from home.
So
Sell it.
I just was not good. Not good.
So
I
for
mean,
you, but
so
just in in
so
general.
I take that back. Okay, so one day this week I stayed home and made calls from my office,
Okay.
and it was a great day.
Okay.
I made so many phone calls. I got so much accomplished, but that's one day.
Mhm.
If I had to go back again the next day, I would have been completely. It would have been completely different. Both personally, and I just get and it's just not as productive.
So sell it, but every once in a while,
That's a
maybe.
buy sell.
Got it.
Yeah,
Okay.
that's a 4 day a week
Okay.
sell, 1 day buy.
Okay. Chris Beard.
Boy, you're challenging my Christian faith here. Forgiveness.
And you got your tech shirt on.
Um, you know what? I'm gonna buy it.
Okay.
I'm gonna give. He deserves. He deserves second chance. He deserves.
I agree.
He deserves.
Completely agree.
And what he did for when he did it for us was fantastic. And met him a
I
couple
think he'll be
times. He was
successful
good
at
to
Ole
me.
Miss. Everybody gets a second chance. Like I'm with you.
I think
So
he'll be successful. He'll be successful anywhere.
yep.
Everywhere.
Yep. Okay.
That's a good one though.
Now I put some thought into that
You
one
did
for
it.
you.
Yeah, you did.
Okay. Playing offense.
Playing offense.
Well, you said this is a like block and tackle business. So
My buying.
just the scenario, you buying or selling playing offense.
You'll always be on offense.
Okay.
Always be on offense.
So buying it. Okay.
Yeah, buying it.
Playing defense.
I mean, sometimes you have to, but I would never choose to.
That's not your choice. Okay. So you're
Yeah,
selling
I'd be
it.
selling it.
Got it.
Yeah.
Okay. A Las Vegas trip.
Well, I mean, NMHC is there every year, so you got to do it. Man, it's so funny. I had this conversation with my friends. I would sell that unless I have to go for
Unless
a
you have to go.
conference.
Yeah. I'm not a Vegas guy.
Yeah.
I'm the same. I'm like maybe a day or two, but
Yeah, I mean,
So-
I'd play cards with you right here if
Yeah.
you wanted to play, but
Yeah.
I no desire to
And I
go.
would own you. So,
Yeah,
no.
no, yeah.
Okay. Last one. This may be actually 11, but
Okay.
pitching a deal.
Oh, totally buy
Buy
that.
it.
That's my favorite. That's
Yeah.
my happy spot.
Just
That's
you've,
when it's just game on, the intensity of it, the
yeah.
finality of it, the you put on a tie, which, used to, you pitch deals all the time.
Hmm.
I mean, it was very common. In fact, back in the day, I mean, you got on a plane, you went to New York, you got on a plane, you went to LA.
Yep.
It was kind of big time. Then, Zoom happened and you don't have to do that.
Hmm.
And now it's like you don't even pitch much anymore. It's just
Okay. So do you think that would be a way to separate, a firm to firm as you're in person, you're there, or like did
you
some of these
always
guys
try.
not even, yeah,
You always try, and from our old boss, Brian Boy, I learned that. I
yeah,
mean, it's like if you mention something about, hey, this guy may be selling, who's like, get on the phone, call us admin, and said,
yeah,
get us 2 flights to San
yeah.
Francisco
It's awesome.
tomorrow morning. Let's
Love
go
that.
get in front of them.
I love that.
Yeah,
I too enjoy a good deal pitch.
yeah.
So even to like
It gets your
investors, it's like
juices
it
going.
does. You know the deal well, you're
Yeah,
selling. Yeah, it's
yeah.
great. I do too.
I have a picture
Good
up,
money's
and
made.
this may be a little. Is it TMI? Too much TMI?
We'll see.
I have a picture of me on my during COVID. It was a cabin, a broken bow, pitching a deal. And it was Zoom,
Hmm.
live. And I have, suit, a coat tie on,
Hmm.
whatever. But then I just have on Texas Tech gym shorts and house shoes, underneath.
It's awesome.
And then
That's not too much
I stood up,
information.
and I had my glasses on, and I stood up,
That's
and
like,
my wife took a picture of me. And
yeah.
I've got it holding up.
So you're like, that's like a meme. So you could be a
Yeah,
meme, right?
yes,
Just for that
exactly.
that point in time in
Right,
everyone's life.
right,
Just that's fantastic.
right.
So, well, that's buy or sell.
Uh,
We
that's
appreciate it.
awesome.
Yeah, man.
I could do more. You
Yeah.
come up with 10 more. Send it to me more. That's awesome. This
Well,
was great.
I appreciate you being here.
Yeah,
I
thank you so
sincerely
much.
do.
You're
So if
you're a
somebody,
wonderful guy. I trust you implicitly. I'm so proud of how you developed and
thanks,
grown
man.
over the years,
I
and
really
you're
appreciate it.
crushing it.
Yeah. Thank
Really
you.
great.
Here's to many more. So appreciate it.
Thank you so much.
How can somebody connect with you?
Uh, Email
Yep.
probably best. Richard.furr@nmrk.com.
Perfect. That's multifamily deal talk, man. Thank you for being here. Sincerely appreciate it. And I mean, obviously with your experience, hope to have you back, hear about another deal. So
Love to.
that's great.
Thank you.
Thank you very much.
All right. Take care.